Have we finally seen a bottom in the slide for natural gas? I thought, given some of the moves that we've seen recently, it was time for an update. Just to recap, we saw the price peak in the summer of last year, then slide about 80% from those highs to the recent low in February. Then we saw this really big rally, relatively speaking, in percentage terms, where the price moved about 40% higher off those February lows. Had a really strong finish at the end of last week, only for the price to gap lower as this week got underway. And we've seen the price drop back by about 15%, and we're not even halfway through the trading week. So I thought, let's do an update on natural gas. Never a dull moment. I'm David Jones, so as usual in this video, we'll go through and catch up with some of the recent news around the natural gas price. Then we'll jump onto the charts and take a look at things in a bit more detail. I think given a market that moves around like this, there are always opportunities in both directions. It's been pretty much one-way traffic in recent months, but I do wonder, given the size of this rally, which I'll talk about more when we look in the charts, I do wonder, is this time any different? Before we get into it, as usual, don't forget, I do a weekly newsletter. It comes out on a Saturday usually, although this week's might go out on Sunday. But it's a catch up with what's been going on in markets. It's a look ahead to the next week. What's the hot market that I'm going to be watching? It's a trading tip from me, and it's an update on some of the markets that I'm trading as well. So to sign up for that, if you go to my website, jonesthemarkets.com, if you scroll to the bottom, there's a box at the bottom of the page where you can sign up. You can read about my trading course on there, read about reviews on Trustpilot from people who've been on the course already, but go direct to the website for all that information and to make sure you're on the list for the newsletter from this weekend. Right, let's get into it then. Take a look at natural gas in a bit more detail. So, like I said, we had that 80% fall since the highs in last summer. It was a fairly relentless slide in the price of natural gas, and in February we saw it trade back to its lowest levels since August 2020. So we had a 2.5-year low in natural gas just within the last couple of weeks. And then since that low, we've seen it soar about 40% into the end of last week. So the price of natural gas nudged very close to $3 by last Friday, by close of play last Friday. Very strong finish for the week. And some of the things that have affected natural gas throughout the winter, just to rewind to why it's had such a tough time of it. We had in the northern hemisphere unseasonably high temperatures for winter, which clearly affected demand for natural gas. If it was a bit warmer than expected, then demand for natural gas dropped off, and that is something that has put pressure on the price all the way through the winter. And then we've seen an adjustment. It's a real supply-demand seesaw for natural gas. We saw this adjustment as producers in early March scaled back production of natural gas following the drop in demand. And that was, I think, part of the reason that we saw the price rally quite strongly, because we did see a drop in production. But the other thing that's playing the part here are weather forecasts. And it really is being knocked about by the changing expectations for what the weather's going to be in the weeks to months ahead. Because we saw it gap lower. It fell 10% straight away when trading resumed on Monday. And that was following a forecast for less severe temperatures, so milder weather than was expected, which reversed completely what forecasts were saying last week, that temperatures could be colder than usual, which helped fuel that rally higher. So, it's causing significant swings in the price of natural gas. What's going on with expectations about weather? We'll see how it all settles down. But, that's what's making this market so volatile. And I think clearly in all markets, you have to think about managing risk, even more so in a market like natural gas. When I'm trading, I always trade with a stop loss. I'll talk about some of the stop loss levels I'd use on natural gas at the moment. But as usual, to see where the opportunities are and how important this recent February low could be, let's jump back onto the charts. So the big picture view on natural gas, we saw it peak last summer at $10. It slid down to almost $2 in February. Lowest levels, we've got to go all the way back to here, summer of 2020. So, for me, what's interesting is what's happened since last summer. Let's zoom things in. So if you're going to be a pedant, you could say that that's the long-term trend for natural gas, which is fair enough. We're taking it off that absolute high last summer. We've seen it rally a few times to this trend line. The big trend is still down. It would take, at the moment, it would take a move through about $5 to even suggest this big trend is changing. So the price of natural gas would need to double from where we are now to put that bigger trend under pressure. So that's a perfectly valid viewpoint. But what I thought was interesting, so we are going to look a little bit shorter term. Let's just step things in a little and see what happened since December of last year. You can see it was fairly relentless from December of last year. We'd have a couple of days, a couple of green candles in a row, like this area here in late Jan. And that was as much as the natural gas price could manage before getting slammed back down again. But for me, it's interesting because of the rally that we've seen since February. We have had a much more sustainable rally. Ultimately, so far, we're only a couple of days into it, the market has been knocked down again. But we did see a much more convincing rally, I thought, which starts me perhaps thinking, well, are we past the worst for natural gas? I think we're going to need to take a look at the shorter term in a second. But let's bring in an RSI first of all. So this is a 10-day RSI, classic overbought, oversold indicator for markets. Not surprisingly, it's been oversold on natural gas a long time. For much of this year, it was oversold until the first week of Feb. It blipped out of oversold and then blipped back down into it. And then we've had, with this rally up, we have had it nudge up near overbought. But for me, what's interesting from the RSI, I mentioned it on that technical analysis video I did the other week. It's an hour-long introduction to charts and TA. If you haven't seen it, take a look on the channel and watch that. But what was interesting here was this idea of divergence. So the market, let me just step things in. So the price of natural gas hits a low the first week of Feb, and the RSI is at a low. The market goes sideways for a bit, then sells off, hits a fresh low, but the RSI, as we can see, is making higher lows. So this is known as divergence, bullish divergence in this example, where the market's doing one thing, but the RSI is doing something else. It can be a suggestion that perhaps the weakness is getting overdone and we're due a rally. And that's what we've had so far. And it's been, in percentage terms, it's been an impressive rally, from just above 2 to nearly 3. We saw it's a 40% rally in the price of natural gas, more than 40% up to that high at the end of last week. So from one point of view, if you were thinking, well, actually, I wonder if this is a short-term low for natural gas, then for me, the really obvious place to put the stop loss is the other side of that low. That low from the 22nd of February, around about 206. Let's say if I thought the market was going to recover from here, I might go 190 for a stop. So my risk would be about 70 cents based on where the market is trading now. But the upside, if we do see further recovery, clearly there could be a significant recovery here. But let's take a look at the shorter term, just to pick up on some of the important levels to watch. So here's the hourly chart on natural gas, just to focus on that recovery off those lows near 2, up near 3, and then it got slammed again. But we did break, or the price did break, some important barriers on the way up. We had this whole 265 area was a problem, and then a bit further back from the 8th of Feb, 270, 275 was an issue, and then going right back to the beginning of Feb, end of Jan, 290 was a problem. So we saw lots of these levels break, and from a technical charting point of view, that could be viewed as a positive. So I think in the short term, I could well be tempted to be a buyer of natural gas. But let's take a look at some of the other hurdles on the upside on this hourly chart. I think the big problem, the next big area we need to watch is this whole $3, let's say $3, $3.10. $3, bit of a psychological level. I think if we can recover, first of all, back up to last week's highs and then start breaking through 3 and sort of establishing a bit of a range around $3. And for me, the next big target is going to be a run back up the 24th of Jan highs, just ahead of $3.50. So I think there's definitely potential on the upside if we do see this price stabilize after what's happened
this week. I'd still be a little bit patient, to look at the short term. Where have we come so far? At the time of recording on Tuesday, the market has pushed a little bit lower today. So for me, I'd still happy to be patient. We've got that really big support, the lows, the 2.5-year lows, down at just ahead of $2. That's a really important level. We've got shorter term support coming out around $2.35. So if I absolutely had to be a buyer now, the closest I would want a stop loss would be the other side of $2.35. Let's see how things work out. From a short selling point of view, if you thought, well, actually, natural gas has got further to go, then again, if I was going short now, if we had a decent rally back up to perhaps fill some of that gap left at the beginning of the week, then for me, the tightest I'd want my stop when going short would be the other side of $3. I think if it starts breaking through 3, it starts to look as if the recovery is continuing again. So, as is often the case with natural gas, never really a dull moment. I would be leaning towards, perhaps as the week goes on, we'll see something of a recovery back up to start filling that gap that was left this week. But the really big picture, if we are going to see a turnaround in natural gas, it's all about that February low. I think if we start breaking below $2, then for me, any ideas of recovery go out of the window. But the recovery that we saw over those 2 weeks or so was encouraging and is the strongest we've seen, this market being for, I think we've got to go back to here. When was that? Beginning of December was the last time we had any sort of sustainable rally in the gas price. Ultimately, that ran out of steam and we saw the price really plummet. Let's see what happens this time around. And keep an eye on that big low at $2. But perhaps a bit more encouraging from a bullish point of view, probably the more encouraging move that we've seen in natural gas for some time.
That's it for this update in natural gas. Never a dull market. We'll take a look at it in the next live stream. I won't be doing a live stream this Friday because I'm away. So the Friday after, I'll do a pre-recorded video again in a couple of weeks. Don't forget, go to the website to find out more about my trading course. Sign up for the newsletter that goes out every Saturday. Catch up on markets, a hot market for the week, and a trading tip as well. That's free of charge, and I just send it out once a week. All the details are on the website, jonesthemarkets.com. But for now, we'll leave things there. So until the next time, good luck with your trading.